Well, Jerome Powell has come out and they are kind of saying we are thinking a little bit harder about December for those rate cuts. They're going to have to keep track of the labor market and all this good stuff. And what we noticed on the technical side, or at least from our weekly expected moves, we are outside of them and we know that this is an area where you do have some decisions to make. And you're right by that monthly expected move as well. So, in case we're going to head up for a trap still at this type of level, as trap number one might be finished, we're going to talk about that in a moment as we get through a couple scenarios. But I want to get you guys these daily expected moves for tomorrow. I want to go into the daily chart, the 2-hour chart, and the 30-minute chart today. It's going to be very imperative to be paying close attention and try to keep up with this video because we have, in my mind right now, two main scenarios to watch out for. But we're going to talk about the daily chart first, so let's get into it. The daily chart here, I really wanted to just go over the daily chart, read off the daily expected moves for tomorrow. So daily expected moves, 692.88. It's barely moved. They were roughly the same from today, which makes sense. We're right at that same-ish closing price. I think this one moved up a little bit, 681.90. To the downside there for tomorrow. This is our 68% zone for tomorrow. We've been landing in those zones for a couple of days as we did land outside of them for a couple of days. So at this point, we do see that we need to check on things, right? The daily, we wanted to make sure to keep track of this MACD. We wanted to keep track of this RSI. So the Qs are showing some interesting things. Now, the main part here is one, with the MACD, I like this point a lot more. As far as just the discernment with the chart, I like this one a lot more. I think we still have the opportunity to see what goes on here. We discussed in our last video that this is overall a bullish thing. If someone is using this chart to talk bearishly right now, making you aware of a divergence is one thing, but saying that it has to confirm is another. You have to prove that statement, and so that's why we're going to go into 2-hour charts. But overall, I really like this, and really the important part for me is not the MACD here. It's actually the relative strength in this area. I think this is very, very critical. Are we going to violate this point to say, hey, we have the chance to keep squeezing, maybe reset those signals for a couple of curl ups like right over here? That is what we are watching. So what do we have right now? Right now, we're at the point where we can still be talking about this divergence. We can still be aware of it, and we can look for those shorter time frame signals, which we're going to go over, which we actually did put out a Patreon video discussing one that we're looking at now because the SPY is taking its time on the 2-hour pullback. So as it stands, in order for us to really say that this is a top, well, one, we'd need to see those shorter time frame hints. We would maybe need to see volatility prove that in some way on the daily time frame. And then at the same time, if you wanted a price action low to pay attention to, well, here is the low that you want to take out to see some bad things. You can come through that kind of level with something dramatic, see some kind of pop to the upside, and then we can curl down again, maybe hitting some lower levels and creating this head and shoulders at some point in November. And it seems like we're really getting probable towards that according to volatility. So make sure to stick with me till the end of this video because we are going to talk about volatility and something very new that we haven't talked about yet based on the price action that we've had. So to clear it up, the SPY, we have not violated the divergence points. Now, this is going to be very critical. A confirmation of this would be a close below the 9-day moving average, a crossover on the MACD, and a cross down. I like it through the center, but some people like the signal line, so we'll say the signal line this time, but we're going to look into the shorter time frames for those hints. I'm popping over to the Qs just for a moment to get you guys daily expected moves. Just read those off. We do see 643.73 to the upside. These haven't changed too much, but we do see 627.81. So a very similar amount of implied volatility to today. Now you are noticing some differences here, and that is, we are not able to hold that point for the divergence on the Qs. So we will be aware that the Qs can say, we can go for another extension here. We might go into a complete end of the year trap. Now, that being said, what do I like? I need to take care of the RSI in this scenario. I really want to be paying attention to the RSI. And you look at this, it's right on its last brink here of violating this. Now, just because you take this out doesn't mean you can't be making some kind of multiple point divergence. That being said, if you take it out, you have to start to pay attention to another little lip over here to create this little divergence like right here before you see something bad. So that's the only thing. It's going to be more complex if we head to the upside for the Qs. That being said, you're holding the divergence now. If you wanted to call it multiple point divergence, you would still be holding it, but you do have the bulls taking a little more control than you would like. Now, something interesting here will be the shorter time frames, the 2-hour. Remember the cues on the shorter time frames, the 2-hour or the daily time frame, I believe too, likes to make lower highs for tops. So the 2-hour and the daily time frame, we'll be paying attention to that. As of right now, we got you those daily expected moves. We're going through the fact that it has violated the MACD. It has not violated the divergence on the RSI yet, but if you get just a little bit more upside, yeah, you're going to be violating that. And that would mean that the bulls are taking more control and you would have a multiple point divergence, which is not as strong as a triple divergence. And let's just do a small moment here. We talked a lot on Patreon about volatility today. We gave out second standard deviations. We're actually going to give one of those out today. So please like this video if you appreciate the information you're getting. Why are we seriously paying attention for a top? It's very, very simple, actually, if we simplify it to volatility. Volatility saw a big pop. It's dropping off down to the critical level of 1683 and right down to 1504, a level we could likely tag soon. But the very simple way to put this is it's going to curl up into positive territory. That's going to be a big, big deal. So we need to be watching this very, very closely, because if this is going to go into positive territory, the last time we did see something like this, I just want to remind you, was right over here. We pulled back and we curled up into positive territory, and that is where we saw the big boom in volatility. And I think we are likely to see some kind of boom up to about 3611. By the end of the year, as of right now, we would have to see how the market proves itself. So this is just a blip in the video to show you, hey, here's VIX on the daily time frame. Why could volatility pop off? Well, because it's not curling up in negative territory. It's curling up in positive territory if we are able to confirm this. But just like I said, if we are able to confirm this, so what is a confirmation, or at least what are some hints, some scenarios in the shorter time frames we can pay attention to? Right now, we have switched back over to the SPY on the 2-hour chart. Like I said, make sure to stick with us. We're doing the daily time frame. We're going to go into the 2-hour and 30-minute now, and then we're going to go over to the Qs and the VIX, because there are some things we need to watch for here. As it stands right now, the scenarios that we really need to be watching for are, do we get a confirmation down right here for the 2-hour, because you're getting that good confirmation. This is a bad bar, by the way. This is not the best bar. The last bar of the day, we always say be weary of that one just a little bit. You can use it if you'd like, but make sure to have risk management. We do get a good confirmation on a solid 2-hour bar with Jerome Powell. We did not get a confirmation on the MACD. We did get one with the signal line for the RSI. So that tells us that we have a few signals here suggesting what? It is just suggesting a pullback, right? A pullback. And that's why I wanted to give you the second standard deviation. 676.40 to the downside. This is a 95% line. So these red lines right in here, this is a 68% zone, but I'm giving you the 95% zone. So it looks something like this. And that means 95% of the time you will close within that like circle right there. So this is a great level to have if we're going to get a quick 2-hour pullback. And we'll go over in a moment what that could shape up for volatility. This would mean that we are in positive territory. So we're going to curl down for a moment and curl back up to create some kind of divergence, just like this one right here. That would mean we curl down maybe to this 95% line, maybe even cross through it to 674.50. Then we're able to curl back to the upside, where we do see some kind of double top or some kind of divergence, maybe even a lower high. This would mean we have 2 little cycle moves here, 1, 2, and then we see if we're able to confirm. This would create potential divergences on your MACD and your RSI. The 2-hour divergences are very likely to do what? Show you weakness and momentum that can curl down the daily chart, which has all those divergences right at this moment. This is why watching the market right now is a very, very critical thing. Now, there is another thing that could go on here, but it is actually on the 30-minute chart. There is a signal with volatility. There is a way that volatility that could shape up tomorrow, which actually would be the divergence play. So we're going to really pay attention to that. But there is a shot that this market does not see another 2-hour cycle move, but instead we actually see an upward move going into maybe the tomorrow or the end of the week. And then on Friday, as we get outside of our monthly expected move and you have a 68% chance to close below it, oh, we can pop up to that level. And if we don't squeeze through, we could roll that into Friday and we could close down in here and see a bad thing. I'm going to go over that right now with the 30-minute chart. Now, this is going to be very important. So I'm actually going to go over into the Qs next, and then I'm going to pull the SPY and VIX together, because the SPY and VIX right now are the 2 very important things. And I hope you appreciate that I tried to take some time out of my day to really explain this thoroughly. So I hope I am not confusing you. If I am, make sure to just slow down, maybe repeat the last minute or so, and then we'll keep on going. As of right now, does the 30-minute have divergence? No, there is no divergence on the 30-minute. This means that this could see a 30-minute move to the upside if we're able to confirm in positive territory, and maybe we even head to that 692.88. That would take you outside of your monthly expected move. That would mean you have a 32% chance to close out here by Friday, but 68% in here. So if you create this 30-minute divergence, that can shape up something critical that is showing on volatility. And I feel like the only way to do it justice, the only way to keep it not necessarily confusing is what I'm going to do right now is I'm going to go over SPY and volatility. I'm going to side by side them and kind of draw up these scenarios and how it would look with volatility because it's very critical. So let me do that for you in just one moment. Okay, and I'm going to try to do this as clearly as possible here. So let's go back over, and we just talked about that 30-minute signal I was paying attention to, but I think that this would be a better way to explain it to you, is be able to show it off kind of at the same time with volatility. So if you've been here for a minute here, you've known that we've been paying attention to volatility. I said that I think the likely scenario is, and I'm still kind of holding to this, but I just think we would see something a little bit less probable from the SPY. But I think that if the volatility calls this, where we go down to potentially 1504, we create that kind of triple divergence for the MACD. You've heard me talk about that. And then a little divergence down here for the RSI at the same time. That could be a very interesting thing because that would mean that this scenario is actually going to take place for the SPY, and that would be that the 30-minute is going to see a pop tomorrow. This would mean that the 30-minute is going to curl up into positive territory. Now, the 30-minute would curl up into positive territory, and we'd have to see if a divergence is able to confirm by Friday. This would mean we could go up to that daily expected move. We could potentially see some kind of roll, set up a divergence point like this while creating a 2-hour divergence over here on volatility. Now, why would this be critical? Why would we actually be looking at a SPY that has a 2-hour chart that is dramatically high up? But why would we be paying attention to a top at that point? We don't have any other weakness signals in here. Well, that's because volatility is creating the big daily cross-up signal. The volatility itself is going to be creating a 2-hour divergence, which starts to get really close to that center line, which creates enough deadness and momentum that volatility might show you that the top is here, while the SPY and the Qs do not. Or the SPY only shows it to you with a 30-minute divergence. So this is something that I think you have to be very aware of as of this moment. I think that this one right here would be very interesting, and this is how it would shape up. Now, I'm going to go over the other scenario really quickly that we talked about on Patreon, which is starting to take up a little bit more room every single time I think about it, which is actually what we talked about early on the 2-hour with the SPY. Coming down to this type of level, seeing a big, like kind of quick retracement, and then you're actually able to see a boom to the upside where we do start to roll that potentially early next week, creating some sort of double top divergence up here. But this would be on the 2-hour chart, right? We would quickly make a 2-hour divergence. Now, that would not shape up because here's the thing. If that would happen, the 2-hour would be coming down, which means volatility most likely goes up, right? So what would happen here is a higher low for volatility. That means we would come up, we would take out this level of about 2082 for volatility. We would see that start to break to the downside. We would curl down and create a higher low. We would create a higher low right by this like Tuesday, November 4th, which would create that little divergence here for the 2-hour charts. You would get a divergence for the 2-hour on the SPY, but you would get a 2-hour higher low for volatility over here, which would mean that this MACD does not create the divergence over here like scenario one that I pointed out earlier, but instead we would see this go positive. We would see it curl down and then see another move into positive territory. So these are two scenarios that I really wanted to put out there. And this is one that's been kind of bugging me for a couple of days. And now it's starting to justify itself. Why does that one justify itself? Or why would that make sense for us to make a lower high? Well, it's because if we're going to get the 2-hour pullback and we're going to see the 2-hour go to the upside again, well, then that would mean that this 2-hour has to go up, right, for volatility. So that's the big clarification there. So as it stands, it looks like the two scenarios that I'm really looking at, as far as it goes for the SPY in relation to volatility. So this will be our little volatility portion, and maybe we can go over the Qs because they have a lower high that is potential, is you will see some kind of 30-minute pop right here. That means volatility will break down and potentially make a new low or a divergence point in some fashion. Then you will see a confirmation of that to the upside, while the SPY on the 30-minute is actually able to confirm that 30-minute divergence to the downside. This would be a topping signal. Why? Because of volatility having the 2-hour divergence, because the volatility as of right now does have the daily close to that center line. So if it makes a signal that suggests that the daily can curl up, then that is a topping signal. That is the scenario that I am really paying attention to at this moment. But knowing that that is not the only one is important. Paying attention to the other one will be just as good, where this thing could take off to the upside, create that higher low. That means we will see a big dip, and then we will see the SPY make a lower high, or the SPY make some kind of divergence for the 2-hour chart. That was a lot. So I totally understand if you need to watch it again. Even myself, I'm really going to probably watch this video multiple times just to make sure that that is as clear as I can be, because that is very hard to explain. It's very hard to explain that two different scenarios, especially a topping signal that is really flashing red for volatility, but it's not really flashing red as far as the 2-hour chart for the SPY. So it is a scenario to really keep in mind. We'll keep you updated on that, especially over there on Patreon. We do see the 30-minute chart here. We see that bad boy looks like it wants to curl up. If we're able to curl up into positive territory, hey man, that thing is still up there. You don't have divergence or anything like that. So maybe we're going to see a little 30-minute divergence. This is where we want to pay attention to that upside expected move. Now, there is something interesting here. The Qs have earnings and things like that, but remember that they are outside of their monthly expected move. So this means that as we head to the upside, early on in November is still going to be likely for a 2-hour pullback. Even if you're still bullish, even if you think that these topping signals mean nothing, or you just think they're going to extend in November, like we have mentioned a couple days ago. Okay, awesome. If they're going to extend in November, they're still most likely going to pull back, consolidate, right? They're going to retrace and then go to the upside, or they will consolidate and then head to that upside. It is very unlikely for this market in the conditions that it's in to keep gapping up and just gapping up and gapping up without ever seeing some kind of retrace like this or consolidation. So I just wanted to point that out if you are bullish, which being bullish makes total sense when you look at the 2-hour MACD for the Qs. 2 hours really high up, the RSI is really high up. If you get that pullback by the center line, you see it confirmed to the upside. What is very likely to happen here? Well, you're very likely to test this high, go make a new one. And that's where we usually pay attention to the next weekly expected move. So please subscribe if you want those over the weekend. We do give them out for free for the SPY and the Qs. You can see we are outside of one right now. It's kind of hard to see. It's the purple line right here. We're outside of it, which means we have a 68% chance to see a drop into Friday close, just so you are aware. But this thing is extremely positive, so it's hard to say some kind of top. Now, there is something that happens here. We have earnings and things like that under the tech sector. That's why I really went over the SPY and the volatility, because those won't be as affected. They will be affected, but as far as it stands, you have Google earnings coming out right now. I believe you had Meta, and I believe Meta shit the bed. So these things can really rattle the Qs for a moment. So if the Qs see something overly dramatic, and then they come up and make the lower high, that would be something to pay attention to. If the Qs make a lower high while the SPY makes that divergence, well, we're going to be talking about it, okay? So we'll try to keep you updated on these things, but the Qs, that's the only thing that's really different over here. The big topic with the Qs is you're outside of the weekly, you're outside of the monthly expected move. So you have to be critical in your need to not be greedy as a trader and understand, hey, we have a high probability here of seeing something like this. And maybe I just want to wait for that 2-hour pullback before I get really bullish again. The trend is not bad by any means. Really, if we take this market into consideration at this moment, I really want you to pay attention to this last statement here. If we really pay attention to this market at this moment, the SPY and the Qs, there is nothing in the charts. This is why it's a crazy time, guys. And I have to say this because this is the honest truth. This is what the chart says. The SPY does not have a reversal signal on the 2-hour chart. That is not giving us a hint that we are about to see a drop like we saw right here with all of our trap number 1, 2, and 3. We have seen trap number 1 potentially show its face. If we see trap number 2 and it confirms, we can say it's likely, but you do not have trap number 2 yet. That means that we are potentially at this stage still, and we can see a continuation. So we could still see continuation before we get something bad. This is a bullish market right now, according to the SPY. Now, we are paying attention to something very critical, though. Are people ignoring risk? Is this a major FOMO move? And there is something behind the curtain that is telling us something different. And this is why I like that you watch to the end of the video so you can hear it very clear cut. Volatility is saying something completely different. Volatility is saying, I have a daily chart that is right by the center line, and if I curl up into positive territory, then you are going to see a massive wave of volatility like this one over here, where we are very likely to tag 3611. That is a move in volatility of 114%. Do you think that that would rattle markets? The answer to that question would be yes. Yes, it would. So paying attention to that is very good. And then if we go look on the flip side to something that I wanted to bring up earlier in the video, but I forgot, we can look at the dollar. We can look at the dollar. We can look at it from a weekly standpoint and see that thing's been climbing. It's been at the bottom here. We called a bottom for the dollar, and we're seeing that shift up. We've seen it come to fruition now where that dollar's growing while the market grows with it. Why are people going into cash? This is most likely where traps can ensue. We do see the dollar has extended to the upside just barely, but at the same time, we can look at the dollar on these shorter time frames. We can look at it on 4-hour charts, and we can see that it just recently, aka today, turned up on the 4-hour time frame by the center line, and it's violating some points right now. So if we are able to make new highs, we're able to get through this 99.41. Well, we already have what? We already have the dollar going up and the market going up at the same time, which means someone knows something, someone is going into cash. And the other thing that is pointing towards the same exact thing, that someone knows something, someone is going into cash and buying volatility, is just that, volatility, because as we go to all-time highs, as we go to extreme highs with these last few days, we have not made new lows for volatility. That means you have to be very cautious with your money. So hopefully you guys are able to understand what I'm putting out there. The only thing that we have added, the scenarios have not really changed. We just added one of them. We added the one that says, hey, if we do make a potential 30-minute divergence here and you see a 2-hour divergence on volatility at the same time, that would be a topping signal according to what? According to volatility. That would mean that we are going to make that 2-hour divergence potentially tomorrow. We would see that divergence come to fruition, and then on Friday, we could potentially see something bad. So we will be watching this very closely. Hey, if it wants to even give us a higher low here, that's fine too. We just need to see if we can curl up into positive territory to get that daily chart going. I thank you guys so much for watching this video. I really wanted to, I actually took my time with it. I really did. I wanted to be able to explain these things thoroughly as we are adding the potential for the higher low, the lower high, the higher low for volatility. I think that's very critical because at the end here, I do have to say, you could see both. You could see volatility create this 2-hour divergence, and this is like the fun part about the end of the video. You get to hear some of the thoughts that go through my brain at the very end of the video. If you like it, make sure to subscribe. You could see both. We could see volatility turn down on this 2-hour, create the 2-hour divergence on Friday, come down to that 1504, start to spike up. We actually see this thing rise up above these levels. We see this curl down, create that right shoulder, and curl to the upside. And I'm going to draw out exactly what this would look like for the SPY for you since you watched to the end of the video. And this is what's been going on through my head to see if I could really draw this up to make it make sense for people. So I really hope it does. This means that we're going to curl to the upside to the end of the week here. We're going to see on Friday some kind of news or top in some way. We actually see at the 30-minute divergence show here, the 2-hour actually drops off. Then that 2-hour is able to curl back up into positive territory in November. We extend it into that potential Friday, and then we could do all of this. So that's how long this thing could extend out. I don't want to confuse you. I want to make sure to bring all these to your attention. Take notes if you have to, take little screenshots if you have to of the type of things you want to pay attention to. But overall, if you understand divergence, you understand lower highs, you understand what volatility is showing you with those things in consideration, you'll be just fine, okay? Trade like water. Look at the rock that's down the stream. That volatility signal is a big, big rock, so pay attention to it because we want to end up where? We want to end up in the meadow, not down by the it clown. So thank you guys so much for watching this video. I hope you guys have a fantastic rest of your day and be looking out for some weekly expected moves over the weekend. Be looking out for the monthly expected moves, as I may not be able to make a video tomorrow. Hopefully I can spend at least 10 minutes with you guys tomorrow, or at least get you guys daily expected moves on Patreon. All right, guys, have a great rest of your day. Peace out.